notre prochaine présentation qui est comment on peut encourager l'acquisition des compétences financières. C'est très important parce qu'on apprend aujourd'hui qu'une des choses, il faut que nos jeunes apprennent l'argent, à gérer l'argent, comprennent l'argent. C'est à la base même des choix de carrière. Le décrochage scolaire, comme j'ai dit depuis ce matin, qu'on essaye d'attaquer, une des problématiques derrière, c'est une grosse problématique financière derrière. Alors, notre prochaine invité, Jessie Jason. Hello, Jessie. Hi, your microphone is muted. Okay.
Yes, you can hear me now?
There you go. Yes.
Awesome. Thank you.
Look where you find me.
Yes, it's my pleasure today to be actually sharing this and speaking to each one of you here. Can you actually see my presentation now?
Yes.
Yes.
Yeah, we can see it. I'm just going to introduce you a little bit.
Yes.
Jessie, she came to Canada from the Middle East in 1997. She's been in the healthcare industry as medical doctor prior to becoming full-time at World Financial Group. And she's married for 27 years with 2 wonderful children. She's currently the executive marketing director and life insurance license and mutual fund professional at World Financial Group, helping youth and adults to secure their financial futures and have an excellent career path. And I know Jessie personally, I can tell you. I can disclose that. And I really want her to tell you, I think she's the best person to tell you why it's really important to tell people about money, about finances when they're still young, not to wait when we're old. And we need to start changing, and that's how we break the cycle of poverty. And we help our children get better career out there when they understand the dollar attached to the career. So the floor is yours, JC.
Thank you so much, Rose. Thank you for that wonderful introduction. And here's what I want to say to everybody. A very good afternoon. And let me start thanking each one of you for joining us today. And if you're meeting me for the first time, my name is Jessie Jason. And Rose has already explained what I do. I'm a senior financial educator here at World Financial Group. And if you're watching this presentation, you know that we do a lot of other presentations as well, such as, how you can increase your cash flow, manage your debt, how you can build a solid financial foundation for yourself, how you can do estate planning, asset accumulation, retirement planning, and so on. But for today's topic, we're going to keep it at personal finances for teens and young adults. So let's keep going on. And why is this topic today? Is it relevant? Here's what I want everybody to know. We do about 250 presentations in a year. And we get to meet a lot of young adults and, people who are just starting off their life here in Canada. And every one of them have such horrible stories most of them have such horrible stories to share with regards to, the fact that they did not know something. And because they did not know something is why they feel that, the lack of information is what would have actually brought them to the lack of information that they would have gotten into some sort of disasters or small disasters in their life. So, when I don't know who is attending this presentation today, but I'm sure that there are people that, who are young and who are a little bit older. And sometimes I may have parents that are attending this session as well. And most times I get this question, or the comment that, oh, they should be teaching this in school. Absolutely, yes, they should be teaching it in school. But let me tell you, they may be doing it, but are they doing it well enough that people actually get the messages right? So here's what I want everybody to understand, that it gives me, people like me, an opportunity to outreach the community so that the young people are empowered to actually learn about personal finances. Today's presentation, here's what I'm going to do. Because it's timed, I can only do certain things, and I picked these topics that could be relevant to the people that are listening today. So, credit, there are some do's and don'ts, and we should be aware of it. How to get good credit. And lastly, I will touch a little bit on student loans. So, let's talk about credit. Credit is actually a system. What is the difference between credit and debt? Credit is a system whereby there are borrowers and there are lenders. Some people who borrow the money become the borrowers, and people who lend the money become the lenders. But every time there is credit, a credit is issued and a credit is used, debt gets racked up. It could be a useful tool to help, think about credit as a
Sorry,
good.
Jesse, could you please just share your screen with us? We're not able to see the presentation.
Oh, are you not? I thought
No,
I did. Okay, give me one moment.
thank you so much.
I thought I did the presentation. Okay, share screen, window. And here we are. Are you seeing my screen now?
Perfect. That's great.
Okay, perfect.
You
Thank
could
you.
put it in full screen mode, and that would be
Yeah,
great.
that's what I had it on. All
Great.
right. Can you
Thank
see it now?
Perfect. Thank you so much.
Okay, great. So credit and debt. So that's what I was talking about. That, at the end of the day, okay, let me just go back one slide here. Yes, I was here. So credit is actually a tool. And what would you call a tool? A tool is something that you could use to ease your life a little bit, is what a tool would be. But this tool, as you know, the ones that we use every day, some of them could cut you, some of them could electrocute you, some of them could do bad things to you, but then you learn how to use the tool properly so that it aids in doing things or getting things done faster. Credit is exactly that kind of a tool. You just need to know how to use it wisely to your advantage rather than you make it into a debt that you really cannot afford. So, when we get into debt, I want you to understand this. The users of credit will always be in debt if they don't understand something. And that is what I'm going to focus on today. If you take credit, you must know a term called grace period. Understand that and cement it in your brain that you need to be in the grace period. So if the credit card gives you a certain number of days to be in grace, which means you can use the money you did not have through the credit lending companies that offer you this credit, but make sure that you pay off the credit or the money that you have used within that grace period. What happens is debt has a cost. You see, nothing comes free to us. So if that credit now ends up becoming a debt, which means you have not paid it off during the grace period, which has made you have to pay the interest rates charged on those credit cards, yes, it is going to rack up. And that cost is never low. Debt actually eats up a lot of people's money. And in the following slides, I'm going to give you a little bit of illustration where you will actually start seeing it. So you do not want to pay that cost. You want to make sure that that cost gets paid off during the grace period. So there are though that was the do's, and now we're going to talk about the don'ts. The don'ts are, the good thing is I was talking about the grace periods. This is a time where, there will not be any interest charged on your credit card. So what do you want to do if you want to keep a good credit practice? You want to make sure that you pay off that credit card at least once a month. Can you make more than one payment on a credit card? Absolutely, you can. Does it affect your credit in any way? Absolutely not. Know that it doesn't affect your credit in any way. The only way it affects is when you pay it down, you have an ability to bring down your balance to zero. And when you bring down a balance to zero, it's like a get out of jail free card, which means in this instance, it's not a get out of jail, but it is get out of interest free card for that 1 month. So you want to make sure that you make those payments on time, that it takes you to the next month and you don't owe any money to them. Now, if you understand how credit works and what you should not be doing is you don't want to hold on to that credit for a longer period of time. Because when credit racks up, it becomes unbearable to pay. That is when credit starts eating up the wealth, and you find people going into, whether you call it consumer proposal or you call it bankruptcy or you call it borrowing money from people and then not being able to pay back, creates or gives such mental stress to people when they start using the money that they really don't have. If you are a good credit user, this is what I want you to learn today. Some of the credit cards have great potential benefits. Some of them give you points, and you can cash those points to buy things. And banks have their own point system, and they're going to give you those cards that you can use those points for. Some of them give you cash back on purchases. And what I want you to understand is this: there are cards that give you discounts as well. So for example, the card that I want to use myself as an example so you learn from it. At Petro Canada, if I use a certain card, I get 3 cents off a liter. So if you are paying $1.30 for gas, I will pay $1.27 for the same gas. And what am I doing? I'm actually using the benefits of this card to my advantage, because I make sure that I pay off whatever money that I've used on that credit card at the end of the month. So what is rule number 1? Try to use the card to the extent that you can actually make the complete payment. That would be a good usage of your credit card. You see, there are good credit practices that you need to follow. So if you look at this, continuum that I have on screen here, it tells you, see, there are good practices and there are bad practices. To the young people, this is what I want you to know today. You see, when sometimes you get a hand on these credit cards way too early in your age. So when you get that in your hand, what do? You shop with the money that you did not have to buy the things that you really didn't need and to please the people that you really don't care about. So these are things I want you to really know, that, when you make these credit card purchases and you see the credit card statement for the first time, interestingly enough, it tells you this is your balance. And right beside the balance, it also tells you, but your minimum payment is $10 or your minimum payment is $20. So what do you say? Wow, this is such a great thing. Right now, I have this card that I can use, and what a good way. I just have to pay $10 or $20. But you see, what I want you to understand is this: you will pay the maximum cost for your credit card just by paying that minimum amount. So minimum amount, not a good idea at all. But if you stay in the grace period and you pay off that credit, yes, it's an excellent idea to have the credit. So when you start life, that is the lesson number 1 you got to learn. Stay within the grace period, pay on time, never go for minimum payments, find a way to pay off as much as soon as possible. So those are the 2 good things that I want you to really understand from here. Now, if you want to know, where can I find my credit? How do I know what is my score? I don't know how to access it. How do you look for it? When you want a medical examination, you will go to your doctor. Likewise, if you want to find out, again, there are ways to access that credit usage. First off, I want to say that, I'm going to separate this world of finance. I know it is artificial, but I'm going to make them into 2 worlds called the first tier financial organizations and the second tier financial organizations. The first tier, of course, is the big banks and the credit unions and, all those companies that you can actually walk into and you can get your credit score checked. You don't have to walk into the banks. These days, you walk into the bank on your mobile phones. So you go in and you log in to online banking, and you will find there very simple English that says, check my credit. or find your credit score. It's very simple. You click on it. These banks or these institutions are actually linked with two of the very famous ones, which is Equifax and TransUnion. They're linked with either one of those. And what they do is when you click the button, they actually check through those organizations that actually keep all of your credit records and they give you the credit score. Click another link and you will get the credit report. So that's how you would access credit. In another way, the second tier financial organizations here, there's something called Credit Karma or Borrower. Those are the institutions that you can go, but they do almost the same thing. You go in and you go check your credit score, you go check your credit report, because sometimes you don't know what actually shows up on that credit. So it's good to know what way you can actually raise your credit card up. So here's what I want you to also understand from here. So interestingly enough, what I did is I went to a Canadian organization. I'm not going to give you the name for that. But here's what I did. I took this very interesting slide so you will all learn as to what cost would you pay for your credit. So very interestingly, they put on their site and they said, so I know that they're primarily targeting young adults is who they are targeting, or vulnerable people. Let me say, people who are running short of money that need to borrow the money. Of course, they are the target market. So this is how they have put on their website. So you're going to borrow $5,000. You can say, I want $5,000. Looks like 5,000 is just going to arrive in the next 20 minutes. And it says the repayment is $133.45. Here's what I want you to all see. How often will you pay? It says here bi-weekly. And how long it's going to take? 60 months. Very clear. Nowhere on the slide have they said what the interest rate is. Tell you something. These kind of subprime lending, interest rates are going to be very, very high, but they just don't declare it. But if you're looking at the slide that I have, I did the same, I did the calculation on the other side, just so it makes it much easier for you to understand. So let's understand this. You got $5,000. How much are you actually paying back? $133.45 bi-weekly, which means you're going to be making 26 payments. Multiply that by 15 years. You now paid them back $17,348.50. Can you imagine that? So you got 5,000 and they got 17,000 from you. Wow. This is what I want everybody to understand today. Doing a little bit of financial education will take you a long way, because you will now understand the actual cost of borrowing money. And then you make an educated decision as to how much you can borrow, what is the cost that you're paying for that borrowing, how long will you have to bear the cost, and whether you will be able to keep up to paying that cost for that period of time. Like I said, credit scores and reports are extremely important. I already mentioned to you how you can check your credit score. And does your credit score really matter? Absolutely, yes. It is, or it gives you the purchasing power. It tells you that if you are in a land of good credit standing, so anywhere from 700 to 900, you are in excellent standing. You walk in, they will give you anything and everything you want. But you're fantastic. You are just the best person that the bank wants to see. But if you are between 650 to 700, you are in good standing. You may be accessible to receive some good benefits and maybe some not. But if you're between 600 to 700, yeah, chances are you can get some, but many things maybe not. And if you're below that, you know that your score really needs to be improved, so that you can get the same perks as the people that actually walk in and they get. What do they get? They can negotiate everything. They can negotiate the interest rates. They can negotiate the points. They can negotiate their mortgages. They can negotiate almost everything if they have a good enough credit score. Now, like I said, how do you check your credit score? You can go through your bank's website, there are credit reporting agencies, and there are those other financial companies. But how do they all operate? They all operate almost the same way, which they have these agencies that keep a track of everywhere we apply. Whenever we change our jobs and we update the financial companies, they update that on the credit bureau. When you first got your job, you put that in. Wherever you have lived, they have your address. They have all the information about you, how many times you're attempting to get the credit. They have all of those information, so that they keep a track of it. Now, who can check your credit score, or why your credit score matters? You see, people who have the authorization from you are the ones that can actually check the credit. Normally, organizations with a business purpose, such as the banks and other lenders, of course, when you want to borrow money or when you want to deposit, either way, if they want to make you a customer, yes, if you want to get something out of them, they will definitely check your credit. There are utilities companies as well. Maybe your cell phone company. Maybe you're going to move into a new home. Most young people, when they first move out of their own homes and they want to get a place to live, guess what happens? So your landlord, the first thing he asks you is, okay, I would like to check your credit. Without checking your credit, it's hard for me to rent out the place to you. So they also will possibly like to check your credit. And you yourself, my explanation to you is, please make sure that you check your credit at least once in a year to make sure that your report looks clean. So these are the people that can actually check to see how your credit score looks like. Why do you think these companies do check the credit? All they are looking for is these words. My friends, are you good enough? That's all they're looking at. Good enough for what? You may be good enough at many things, but are you good enough at repaying back the credit? That's what they look for. So on this continuum, I've just put the arrow in the middle just to show that you are in a good land of credit. Most people are in the good land of credit, but we want to learn how to be in the good land of credit. So they check to see various different things, and I'm going to go over what is it that they are checking. Number one, you have to know how these things work. They're checking to see if you have a good repayment history. They're checking to see if your score is good. What does that mean? You are a trustworthy person, that they can lend out the money to you and that you will pay it back on time. So this scoring formula is called the FICO system. That's one of those systems that they follow to make sure that you are one of those people that they can lend the money to. There are about 5 of them, but 3 of them are very minor factors, but I'm still going to talk about it. It's called inquiries. It only constitutes 10% of the whole score. People say, oh, you know what, don't go and do too many inquiries, because if you do too many inquiries, yes, it brings your score down. Does it? Yes, it does, but in a minor way. So it only constitutes 10% of what, of the whole thing. Second factor is another small one, which is the account mix, which means they check to see how many companies have you had these accounts opened up, and what is the repayment history with all of those companies. So more than one, absolutely, it will be a better way to increase your score. Third one is the length of history, which means, if you had a credit card, you just had it for 6 months, you just had it for 3 months, you had it for a year, not long enough. Most likely, they will want to see if you have a history of over 2 years. Obviously, they like to see that you are a person that has continuous repayment history for a longer period of time. So that is another minor factor. But here is the 2 big ones. That's credit utilization. Watch your balances. You see, for anybody who uses credit, lesson number 1 you have to learn is never max out the credit card. Whenever you use it, remember I said in the beginning, grace period. Try to pay down at least once a month the entire balance. That will actually give you a chance for you to have a better credit score. So that constitutes about 30%. Try to keep your credit balance less than 70%. Then, if you keep your limits within those 70% and try to pay it off on a monthly basis, you stand a very good chance of actually doing better. Now, the main factor for the good credit, again, this is another main factor, is payment history. Here are the things you need to know. What they want to check is, did you make the payments as agreed and on time? Late payments costs you a good fortune. So this is very, very important for you to know. Every time you get the credit card statement, check to see when is my last day to make that payment. Make sure that if you're doing an online payment, you do those payments 3 days prior to that day mentioned on that sheet. Because if you make it on that day because of online banking, and if there is a delay for the sending bank to the receiving institution, yes, you are late in making your payment. So payment history matters, and you must make it as agreed and on time. They check to see your current payments, they check to see your past payments, and that's how they figure out if you are a good credit worthy person for them to lend you more money. What kills credit? Sometimes circumstances. People don't make payments on time. They may say, well, I forgot. That is the lamest excuse that a person makes when they say, oh, I forgot to make the payment. We forget to make the payment because we feel that there is no consequence to it. But the consequence is your credit score keeps going down. So negative payment history in the past, yes, it's going to affect you. And if you had any accounts that went to collections, whether whatever you're doing and it went to collections, or you got the collections company calling you, coming after you, yes, then your account after some time gets rated as an R9. Not a good place to be in. You want to make sure, every month that it gets delayed, your R becomes R1, then it becomes R2, R3, and so on. You see, so you don't want to go into those situations where your R now has numbers beside it. You want to make sure that it's paid on time and as agreed. So you don't want to have these collections or bankruptcies or anything that's being mentioned on your credit. Now, lastly, I just want to touch upon the student loans. You see, whenever a student wants to go to school, number one, you have to understand as parents, there are better ways to fund for your child's education than actually taking the student loans. But worst case scenario, we had to take the student loans. Students must understand that they can go to the National Student Loan Service website and it will give them all the information that they need to know. But here is the gist of it all. When you apply for OSAP, yes, you get given the OSAP, and so it's a bank or a lending institution will actually fund the OSAP for you until throughout the duration of your course. But after the course is done, those loans are now referred to the National Student Loan Service Center. And you're now dealing with customer service reps of the National Student Loan Service Centers. What do they do from the time that you have finished your courses? You will have to start repaying the loans. But again, you have to understand that repayment is also something that sometimes, you finish your course, but maybe you just didn't get the proper job. Maybe COVID hit. Maybe things happened around and it doesn't look as rosy as just finishing the course, getting a job, starting to make the repayment. So here is where I want all of you to know that there is something called repayment assistance program, where it's called the RAP, that you can use, and you can call them, you can tell them that here is my situation and this is what I want to do. I cannot make those payments right now. And they put you on either a holiday until you can make it, or they put you on a subsidized payment program. But there are things available to you if you were to use these services. I suggest that you do the research, go into the National Student Loan Service Center, and you can actually learn a lot about how these things operate. And now with that, I just had 15 to 20 minutes of my time. I want to thank each one of you. And if you have any questions, I will, gladly take it and try to answer those questions. And if not, I'll pass it back to Rose, to all the people that actually have hosted this event. And I want to thank everyone for giving me this opportunity. And it'll be my pleasure if anybody is interested on how to learn more about personal finances, do reach out to me and we will be able to help you. Thank you so much.
Thank you very much, JC. Yes, they're going to make you available at the networking room so that all the questions that people have, they can meet you there and then ask you all the questions that they have.
Absolutely.
Thank you very much.
Thank you, Rose.
We'll talk
Thank
soon.
you. Thank you.
Thank you. Alors, c'est vraiment, on était juste en train d'éplucher le sujet des finances. Je sais qu'on va avoir l'occasion de revenir là-dessus à l'avenir parce que c'est un aspect très important pour la réussite de nos jeunes, de comprendre, de développer la compétence en littératie financière.